A very warm welcome to today's edition of Money Moves. My name is Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Wednesday, the 8th of October. We thank you for joining us at this time on the show.
All right, let's now tee off with today's news now in Kenya, where the Central Bank of Kenya has today briefed the press on its monetary policy meeting held on Tuesday. The briefing outlines the committee's key decisions and provides an update on Kenya's economic outlook amid shifting global and domestic conditions. Let's take a listen.
Global GDP growth has remained resilient in 2025, but is projected to slow down in 2026, mainly due to higher effective tariff rates on trade. The global financial conditions have improved significantly, as reflected in the recovery of major equity markets and the decline in Eurobond yields for emerging markets and developing economies. Risks to the global growth outlook remains elevated due to higher tariffs on trade, elevated trade policy uncertainty, weak global demand, and heightened geopolitical tensions in the Middle East and the Russia-Ukraine conflict. Turning to domestic macroeconomic developments and starting with overall inflation, the overall inflation increased from 4.5 to 4.6% between August and September. Of course, this is still below the midpoint of our target range of 5 plus or minus 2.5. And the main reason for the increase in the overall inflation was an increase in non-core inflation, which increased from 9.2% to 9.6%. In the meantime, core inflation declined from 3% to 2.9%. And as a result of that, the contribution of overall inflation by core inflation remained stable at 2.9 percentage points, but that of the non-core inflation rose from 1.6 to 1.7 percentage points. The main drivers of non-core inflation, we have the three key elements of non-core inflation, which are food, energy, and transport. But the main driver for the high inflation of the non-core inflation is really select vegetable items, and in particular, tomatoes, carrots, onions, and cabbages.
In Nigeria, the World Bank has released its latest Nigeria Development Update, noting economic stability following recent policy reforms, but warning that the benefits have yet to reach most citizens. Titled From Policy to People, Bringing the Reform Gains Home, the report shows growth of 3.9% in the first half of 2025, driven by services, non-oil industries, and agriculture, with foreign reserves now above $42 billion. The bank warns, however, that high food inflation and poverty continue to burden households, urging governments to reduce food costs and expand social protection to turn reforms into real welfare gains. In energy news, the International Energy Agency has released its Renewables 2025 report, the agency's flagship review of the sector, providing new forecasts and policy insights. The report analyzes the latest trends driving the global clean energy transition, highlighting key challenges and opportunities as countries work to scale up renewable power and cut emissions. Let's take a listen.
This year, dear colleagues, we expect a strong growth again in 2025. Our expectation is 750 gigawatts. Yes, we expect 750 gigawatts of renewables will be installed. This is, of course, an important number. And it is somehow, if I am not wrong, somehow 10%, 15% higher than last year. So 750 gigawatts is, again, impressive number, but if I compare with the renewable capacity, which is already finished or about to finish, it's about 1,700 gigawatts, are waiting to be connected to the grid. They are in the queue. It shows the grid congestion problem in a very clear way. So 750 gigawatts are being connected to the grid this year, and 1,700 gigawatts are in the queue. So this is something, of course, we need to take into account the grid issue that IEA has been for all energy sources highlighting for some time. In terms of generation, again, if you look at this year, we expect that the renewables, solar, wind, hydropower, bioenergy, geothermal, all together account more than 1/3 of the total global electricity generation, close to 35%, a significant amount.
In other news, Ethiopia will begin duty-free exports to AfCFTA member states on Thursday, October 9, 2025, marking its first official trade under the AfCFTA framework. State Minister for Trade and Regional Integration Yasmin Wahab-Rebi said exports will move by air and land to various member countries, including Kenya, Somalia, and South Africa. Air cargo will include meat, vegetables, and fruits, while land shipments will cover pulses, oil seeds, coffee, and red kidney beans, with textiles and industrial inputs to follow later. Kenya is expected to receive the largest share. Finally, on News Now, in South Africa, Vunani Limited has merged its fund management arm with Sentio Capital to form Vunani Sentio Fund Managers, a new entity managing over 60 billion rand in assets. Under the deal, Vunani Fund Managers acquires Sentio through a share swap and cash payment, with Vunani Capital holding 63%, Sentio Management 22%, and Vunani Fund Managers 15%. CEO Ethan Dubé says the merger positions Vunani as a consolidator in South Africa's asset management industry, aiming to scale beyond 100 billion rand in assets and expand product offerings. I am Melissa Enoch, and that's it on today's edition of News Now. The show returns shortly with Grace at the archives room for our markets round. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets are wrapping up for the day. Starting off with equities. Coming up on your screen, we can see the equity markets are mostly positive today. Let's take a look at the gainers. Africa's biggest exchange, JSA, led gains today by 1.06%, followed by the EGX30 up 0.75%. The NGX All-Share Index also closed on the positive, up 0.50%, followed closely by the Zimbabwe Stock Exchange, up 0.37%. Kenya's NSE, however, fell sharply by 1.44% to 173.75. Let's do a quick round on some of the Pan-African currencies. The rand firmed 0.25% to 17.17 per dollar, while the Egyptian pound is 0.03%. The CFA franc appreciated 0.18% to 564. The Moroccan dirham strengthened 0.14%, while the naira weakened slightly by 0.22%. Let's switch into the commodities data deck, beginning with energy prices. Oil prices extended gains today. Brent crude was up 1.48% to $66.43 a barrel, while US WTI gained 1.67% to $62.76. Natural gas added 0.51% and RBOB gasoline climbed 1.39% as of 12:28 GMT. And finally, two soft prices. Cocoa slipped 1.68%, while coffee gained 1.56%. Cotton eased 0.45% to $64.17. Palm oil fell 0.04%, and sugar declined 1.38% to $16.14 as at 12:31 GMT. And that's our Money Moves market today. Over to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.